What is up, traders? Hope everybody's doing well. Today's lecture is going to be about bias, or how to identify where the market is most likely going to move or draw to within the higher time frames. So, weekly, daily, and I'm going to go down to the 4 hour as well as higher time frame. So, 4 hour and up, that is all higher time frame. Okay. Starting off on the weekly chart, as we can see right here, this is the weekly chart. Let's assume that we are in this week. Okay. This week happened. We had a nice sweep of some major sell side lows and we closed on a bullish note. So we didn't close an impulse lower than this low, indicating that we might sweep these lows. No, we swept and then rejected higher very heavily and closed on a bullish note. So if anything, that just, to me, is as bullish as a sign can be. So anticipating for the next week, it is very logical to see, since we've swept major sell side, rejected very heavily and closed bullishly, it is reasonable to see at least a fill and tap into this weekly fair value gap, and then potentially see if we respect this, what was originally an order block on the weekly chart, right? And now it's a breaker block because we've inversed it. Let's see if we want to respect it again one more time after this major sweep and rejection, right? So that's kind of the weekly chart, kind of getting a gauge of where I want to see the next week, which is this week's candle print, right? So looking at this week, the present week, for example, we have a crazy sweep of sell side and then a crazy rejection and a close on a bullish note, right? If anything, that means we are bullish. We've swept sell side. We have an impulse lower. How do you know that we are heavy on, let's say, this bearish side? It's if we impulse or at least close below this low. That's where you know that, okay, we might be in for a continuation lower. But if we sweep like this and reject this crazy and close on a bullish candle like this, if anything, that's indication that the next week, at least minimum, is going to be bullish, right? So that's for the bullish, for the daily weekly chart, sorry, right? We have this rejection, close on a bullish note. Now we're anticipating, just based off this weekly chart, to at least tap into this weekly fair value gap, which I'm going to denote right here on the weekly chart, sorry, right? So let's drop down to the daily chart now. All right, dropping down to the daily chart now. This is the weekly fair value gap that we talked about right here, okay? And this is the sell side that we spoke about. We have this sweep of sell side liquidity over here, right? Then this crazy rejection and a close on a bullish note, okay? Now, for the next week, what do we anticipate, right? If we go back to the weekly chart, we can see the dates was this. So this weekly chart opened on the 12th of August. If we go to the daily chart, the 12th of August is this candle right here. So I'm going to draw a horizontal line right here, just so you guys know that this is the start of the week, okay? So we can see here how this is the weekly SIBI, or sell side imbalance, buy side inefficiency, that we outlined, and we want to see price at least tap into and then maybe inverse and try to target higher time frame liquidity, right? Now, a very important note that we see here is on the daily chart, we also have another SIBI, right? This right here, including the volume imbalance, right? We talked about this. So the whole fair value gap, this is the entire fair value gap on the daily chart. So I'm going to outline this in a different color. Let's put it in yellow. Okay, so this is the daily, this is the weekly. Okay, so on the daily chart and the weekly chart, we have a section that is overlapped, right? So we want to see, how is price sensitive in these areas, or does it want to continue up and just completely inverse it and then potentially seek higher prices, right? Now, if we look on the daily chart, we can see how we have buy side liquidity resting here, buy side here, buy side here. This is from the buy side and sell side liquidity lecture. We have an inefficiency right here, right above these kind of relatively equal highs. We have this remaining of an inefficiency plus a volume imbalance right here, which you can see price handsomely respected in the future after it filled after this high right here. So we have multiple targets of buy side. Like for example, we have this buy side right here. We have this buy side right here with this inefficiency that in the future we want to see maybe if we can target that. We also have the daily highs, right? Since we are on the weekly chart, we're bullish, right? With that rejection and close on a bullish note. We want to see if we can sweep daily highs as well, right? Daily highs, we have this daily high, we have this daily high. We don't want to talk about this because we already have a volume imbalance. So let's say the fill of the volume imbalance, right? That's what we're trying to target. So since this is how we're kind of dropping down on the higher time frame, we said on the weekly chart, we are looking for higher time frame or higher prices, right? Since we've swept sell side right here and rejected, right? Since we've swept this sell side right here and rejected very heavily, as we can see right here, sweep up sell side and then rejection. Let me kind of get this right. Okay, so we can see how we have a sweep of that sell side, right? And then a heavy rejection. Now we're anticipating higher prices. By the way, if you look, I talked about in my previous lectures that wicks are gaps, and without even measuring, let's look at this wick right here, this wick right here. If you look how price came down, I would assume probably to around 50%. Look at that. 50. Almost to the tick, which is actually ridiculous. If I draw this correctly, it might be almost exactly the tick. Well, you look at that, right? So that just tells you, like, we're still not in the new week. This is still the previous week, right? This is the new week right here. So this just tells you for the following week that we're going in hypothetically into right now, just tells you that we're that much more bullish because we respected midpoint of this wick and rejected off of it heavy. Wicks are gaps, right? We respected the midpoint of it and rejected from it, right? So on the newer week, that's an even higher confluence that on the daily time frame, 4-hour time frame, we want to see prices push higher, sweep out daily highs, equal highs, tap into inefficiencies, volume imbalances, all that nice, good stuff. So, yeah, that's another kind of indication right there. So, this is the new week right here. This is Monday, I would assume, right? First day, and then this is the Thursday. Price pushes in versus this daily fair value gap on a daily time frame, with it leaving it within an inefficiency, which tells you that we are heavy on side, right? Probably aiming to target this high and then later this volume imbalance and then later this inefficiency with this high as well. We have these double highs, right? So right now, what's the closest target right here? The closest target is this high with this high, this volume imbalance right here. So if we drop down to the lower time frames, now we can see how, okay, we've inversed this daily. We have this high with this inefficiency, with this volume balance. We're most likely going to draw to that region, right? We're still on the daily time frame. So now if we drop down to the 4-hour time frame, we're probably going to start to see more structure form and kind of the idea start to be more clear. So let's drop down to the 4-hour time frame. All right, currently on the 4-hour time frame, we can see here how there's an explanation why price didn't really come down and tap into that inverse daily, right? There is 4-hour fair value gaps or inefficiencies here that price was fine with just filling and continuing up. And that just goes to show you how much more bullish we are, right? It just shows you the strength is that we're not coming down and filling all these inefficiencies. We're just, price is enough and getting enough strength with just filling part of it, okay? So some of you are going to look at this big 4-hour inefficiency and tell me, okay, what if we can just reverse? Isn't that possible? What if we just reverse from here and respect this inefficiency? Well, I'll tell you that is correct, but a very, very important rule that comes into play here is higher time frame is the key. If lower time frame does not align with higher time frame. For example, if higher time frame is telling you we are bullish and lower time frame is telling you we are bearish, you want to rely on the higher time frame. We are bullish on the higher time frame from weekly, bullish, daily, bullish. If the 4 hour in this specific region indicates that we might reject and go lower, well, yes, we might have a small rejection like we did here. Small rejection after we tapped into this efficiency, but that doesn't tell you that we're just going to continue lower, because on the higher time frame, which is key, it tells you that we're bullish, right? So you always refer to higher time frame, whether that's daily, weekly, each time frame that is higher than the other is more reliable. Okay, so if the 4 hour is telling you that we're bullish and the 15-minute is telling you that we're bearish, you always go with the higher time frame. Higher time frame is key, right? You always refer to higher time frame. Okay, the higher time frame in this case is telling us that we are bullish. So this 4 hour SIBI, sell side imbalance, buy side inefficiency, really isn't that concerning, right? Because yes, we might have a little bit of a reaction off of it to kind of trap retail traders to think that we're going to continue lower. But if we refer back to the higher time frame, we are clearly bullish. We rejected that huge wick. On the daily, we've inversed this daily fair value gap. We're pushing higher. On the 4 hour, we're just coming down to fill this inefficiency. What's bearish about this, right? So even before this is inversed, we're anticipating this to be inversed. I'm anticipating this 4 hour fair value gap to be inversed. I'm gonna put it in green, whatever, right? Before it even happens, I'm anticipating price to be inversed to then potentially impulse of us to this high, this volume balance that we can see is clear on the 4 hour as well, right? And then potentially to these highs, this inefficiency. So before it even happens, I want to see it inversed because my higher time frame is bullish, right? And as we can see here, it was inversed, respected here. It was a catalyst to push price higher, sweep out these highs, tap into this volume balance. It didn't sweep these highs, but guess what it made? Even more liquidity for later. We can see here, if we go, let's continue this trend. If we go here, this, how do we know that this uptrend has probably most likely come to an end? We have an impulse. We broke structure here on the 4 hour and an impulse away. When did we have this along all this uptrend? We never really had this. Look at this region, all this from here to here. Did we ever have that? No. This is the first time we've had that right here. First time. And that, ladies and gentlemen, is an indication that we are bearish, or we might switch for some time in a bearish trend. Where might we go? We have this 4 hour inefficiency that is very clear with sell side resting below it. We have this sell side with a daily right here. This is the daily. If you guys remember, daily inverse now. You can see how price came in, filled it, and then handsomely just reversed from there, right? So when we are looking at bias and kind of trying to go top-down analysis, you have to keep in mind the higher time frame. And then on the lower time frame, when it's showing you a shift, like for example, this right here, did it shift in structure? No, it didn't. Like this is just a retracement to equilibrium. If we take, probably even not to equilibrium, let me see. This was just a retracement to an efficiency. On the higher time frame, we are bullish. So yes, it's reasonable to expect some sort of rejection response off this 4 hour massive inefficiency, or SIBI, or sell side imbalance, buy side inefficiency. But it's maybe an indication if you're already in a buy position to take profits and then look for a re-entry later at lower prices, possible. It may be an indication if you're in short from here to not really hope for much, because this is just a retracement and we're just initially reacting off of the SIBI. But before it even happens, since my higher time frame is bullish, I'm looking for this to be inverse, and that's exactly what happened, right? So you can't be fooled by the lower time frames, right? Quote unquote lower time frames. That the 4 hour is lower time frame in relation to the daily and weekly, right? Now, when we go on to the 15-minute, 5-minute, and 1 minute, the 4 hours is going to be higher time frame in relation. But for now, the higher time frames, you got 4 hour, daily, and weekly. The 4 hour is the lower time frame out of the three. So you can't be fooled. You gotta always follow the higher time frame. Okay, so higher time frame was bullish. I'm anticipating this to be inversed, so my bias is bullish even on the 4 hour time frame. So I'm only looking optimally for longs. And if I'm looking for shorts, then it's gonna be short-lived, de-risked, and quick in and out because it's against the trend. I'm not looking for much. Okay. So again, we have this 4 hours inversed, pushed up, and then here we have a clear breakup structure, which is the first time that it actually happened with an impulse. Like if you look here, you might tell me that this right here is a breakup structure, this region right here, right? Let me zoom in on this. You might tell me that this is a breakup structure. Well, that is correct, but if you look at it, yes, we broke structure here, but was there an inefficiency that happened with this breakup structure? No. What happened? You got to look at kind of what happened with this drop. Where did price go? Well, it filled an inefficiency. It tapped into an inverse fair value gap. Yes, it broke structure, but how will it do it otherwise? If price is here, how will price come down without breaking structure? It's just impossible. So in this point, like I want you guys to look at it as if like in a point of view of it's a byproduct of trying to come back to an inverse fair value gap or to tap into an inefficiency. It's a side effect, right? Like how we take medication, it's a side effect. You need to come down and inverse this. So this breakup structure is a side effect. It's not a real breakup structure to continue lower. Like this example, right? Like you look at this example, we have a clear fair value gap, clear, that inversed this fair value gap and also this fair value gap. It inversed the entire thing. So now we have a BPR, if you remember from my lectures. This is a BPR, right? Or actually it's about this region, right? It's a BPR. So it inversed fair value gaps. That's number one, right here. And more importantly, before that, it broke structure with an inefficiency. That's number three. And we have this low. So you have kind of, and it's after we've taken buy side as well. So look at all these kind of confluence. It's telling you that, okay, this might be a small shift in structure to take some sell side now that we've taken buy side. Like if you look back at here, at this point, what buy side did we take? This was still intact. This was still intact, right? But we have a breakup structure. It's like, it's a breakup structure, but in the wrong time. So it's a trap, right? You need to also have some common sense. Like, what did this move do? Like the market, the most important thing it wants to do is rebalance the deficiencies and sweep buy side. It didn't sweep anything here. It came just short and it didn't sweep. No, unless we're in a range, then that's a different story. But here we're clearly not in a range. We're clearly not in a range, right? So we broke structure, yes, but we did that to just tap into this inefficiency. So I'm still bullish even with this drop in a breakup structure. Retail trader would tell you that this is support. We're going to drop down to this previous resistance, and then from there, we'll see what price wants to do. Completely incorrect. This is a trap, right? So that's kind of the 4 hour bias. I'm going to continue on the 4 hour. Let's look at where price went here. So we see price continuing to make lower lows, lower highs, lower lows, lower highs. And it comes to a key area. What is that key area? It fills in this inverse daily, right? This was the inverse daily right here. It sweeps sell side right here. And it taps into this BPR. Look at that, right? You have one shot down right here. And then one shot up right here, right? So this is the BPR. So look at what this drop did. It did a lot of things. So is it reasonable now to anticipate price to reverse, at least for a small period of time? Yes, of course. because also now we've come into equilibrium of this leg. If you take the fib from the absolute low to the high, we've come now into discount, which we've discussed now is a nice zone to enter longs or to look for long positions, correct? Now, even like, I would honestly take it from this range because in reality, I want to see the previous leg. Like this, I view this as one leg, and then I view this as a separate leg, right? I don't want to see this and then count all this as a leg. I want a leg. A leg is not broken and chopped up. A leg is a straight leg, right? So this, in my opinion, would be a leg. So I would take the Fibonacci from this low into this high. And now we can look that we are in discount of this move, right? And put it in red. So now this is a nice zone for us to look for longs, isn't it? Correct. So we've tapped into a 4-hour BPR. We've taken some sell side. We've also tapped into equilibrium or discount of this previous leg. So is it reasonable now to see price shift? Of course. The first signs on the higher time frame is us completely inversing this 4-hour fair value gap. Let's put it to whatever, this color, right? That's the first sign. We've inversed it, came back and retested and impulsed away. That's the most important part. So this just confirms that now we're in an uptrend now. We've shifted, right? We have this buy side right here with the inefficiencies that are above it. We have all of this buy side. Look at this cluster of buy side. Look at all of this. Look at all of this. Isn't that nice? That is a clear target. You have this buy side as well. Mark out this. Extend that. And you have this buy side from all the way back here with this inefficiency. Right? So you see now how the bias on the higher time frame. In this point, yes, we tapped into a bearish fair value gap, but we're still higher time frame. We're bullish. So we just anticipate it to be inversed, right? And we don't switch our bias unless something on the daily and weekly time frame changes. Here, this is simply just a retrace, right? So let's go on the higher time frame, the daily, for example, and see how this is just a retrace to equilibrium of the previous leg, right? Tapping into this inverse daily. So we're not in a downtrend yet. We still have unfinished business here as well. So are we in a downtrend in this move? No, this is a retracement on the higher time frame, but that doesn't mean on the lower time frame we can't catch shorts. Like this is a good week and a half, 2 weeks of price action here, right? You could definitely be trading it. I'm not saying you're not going to be trading, but I'm just saying on the higher time frames, you're still bullish. You cannot be switching bias, but when you're on a higher time frame, you do understand that now we are retracing. If you guys remember from market structure, I told you, you have a leg up and a leg down. And within this leg down, if we're on a higher time frame, this is multiple trends. And you can see how I showed you just on the 4-hour chart, how there's multiple trends in that retracement that you can trade, right? And then if we dropped onto the 1 hour, the 15-minute, there's hundreds of trends that you can be traded. Uptrends, downtrends, all of that. Each candle is a daily candle. It's a day with a price action, but you have to keep in mind that this is a retracement on the daily chart. So when we start to break up, back up again, you'll want to be expecting higher prices to be swept, which exactly happened. You have this was tapped into right here, all of that. And then when this was tapped into, you want to look, okay, this leg, equilibrium, discount is right here, right? What is there in discount that Bryce can push off of? It's definitely, we have this part of this inefficiency right here. We have this part, which is probably around discount. I want to go onto the lower time frames and start to seek and see reasons why price would want to push up, which I'm going to harp on in the next lecture after this, right? So I'm going to actually start from here on the next lecture where, okay, we've swept out this high, cool. We came into equilibrium of this leg, amazing. Now, are we going to continue up or not? Well, I want to go down to the lower time frames and see the first indications, first signs, if price wants to continue up higher or not, right? Which obviously in hindsight we can see that price did, and now obviously in today's price action we're kind of in a consolidation range, which is, it's not necessarily difficult to trade because you're still on a higher time frame chart, right? On the daily or on the lower time frame chart, there's a lot of opportunities that you can trade, right? But let's say this consolidation, let's assume this was a 1 minute chart, you would not want to be trading this at all until price breaks lower or breaks higher to kind of give you an indication that, okay, are we going to continue lower with an impulse, or are we going to sweep and now look to target this? It's much easier. But on the daily time frame, we understand that we're in a consolidation right now. We can still trade the lower time frame, but with the idea in mind that we really don't want to be shooting to these major sell sides and buy sides a bit too much, right? We want to be just getting in with the closest and smallest moves and getting out as quick as we can, because we understand on the higher time frame that we are in a consolidation, we're not in a trend. Whereas here, we understand that we are in a trend, so we can look for these highs and inefficiencies to be taken comfortably, right? So that's going to be it for this session. The next session is going to be bias on the lower time frame and kind of getting more into the session bias and how to identify the session bias. That's where the sauce starts to begin. We start to add up all the things that we've learned. So yeah, any questions, feel free to ask. I hope you guys found this insightful, and until next time, stay safe and happy trading.